This week on the show, a Trump-backed mining company sees potential insider trading. The Infinex ICO sparks backlash after weak demand and a mid-sale rule change. Also, are stablecoins really that safe? We're going to talk about that one as our third story.
One of the big questions is, what is money?
For practical purposes, it exists in a series of heterogeneous databases, very different databases.
Do you believe in crypto?
Digital currency may be an answer. But it is the highly speculative asset.
I do own Bitcoin.
There is no second best.
Welcome to the Crypto Curious podcast, brought to you by the Bamboo app. Every Wednesday, we dive into the dynamic world of cryptocurrency. If you're new to crypto, we recommend starting with our early episodes where we break down the basic and give you a solid foundation to understand the crypto world. And for the crypto curious, the seasoned addict, or the industry insiders, we're here to help you unpack the latest digital news. My name's Tracy, and as always, I am joined by my co-host, Blake. Welcome to the show, Blake.
Hey, Trace. Great to be back. Another week of cracking stories. I really can't wait to dig into some of these ones because, as always, there's something wild happening in the crypto ecosystem. And I think that's really typified by this first story here, right?
Absolutely. So let's jump into it. As you said, this first story sits at the intersection, I guess, of politics, markets and crypto, and it's been one of the more volatile charts out there. This one is the American Bitcoin Corp, or ABTC, and it's the Bitcoin mining and treasury company that's backed by none other than Eric Trump, Donald Trump's son. And it was listed in September 2025 and quickly became one of the larger corporate Bitcoin holders, or he was, of this company. And since then, it's been a bit of a rough ride. Early in December, a lockup for early shareholders expired, and then the selling pressure really hit and the stocks sold sharply with multiple trading halts along the way. And I'll get Blake to explain exactly what those are in a moment, folks. But what's interesting here is what has happened since. And in the past week, we've seen a few insiders step in to buy the shares, as well as seeing some real highs. So, Blake, what's the inside story here?
Yeah, so this is one of the Trump's family's Bitcoin treasury companies that was founded in 2019. And they hold a bunch of Bitcoin. They raised money, and they've also raised money from a Bitcoin miner named Hut 8. And they've got a very close relationship with them. Hut 8 is another listed Bitcoin miner with about a $12 billion valuation. And they're the biggest shareholder here in this Bitcoin treasury company. And they've actually had some staff move across from Hut 8 to the Trump family ABTC firm. So the ex-head of strategy from Hut 8 is now the CEO of ABTC. And they've had the chairman as well, obviously working closely with the new CEO. And what's really interesting here is that the stock is down about 70% since it's initially listed on the stock exchange. However, we've seen some insider buying. The new CEO and the chairman from Hut 8, their largest shareholder, have bought $32 million of shares each, US dollars. So that's about $48 million of shares from each of them. And, could this mark the bottom of this stock? What's going on here? Is Trump going to announce that the US is going to buy 1 million Bitcoins to cause these Bitcoin treasury companies to pump? Or do they have something else on the horizon that no one knows about? Because clearly it doesn't look like a buy, but these key insiders think it is.
I don't know. Is this Blake giving us some alpha here, ladies and gentlemen?
Yeah.
But we have spoken about Hut 8 years ago when we talked about mining companies that were up and coming. I think Hut was one of the top 3, wasn't it?
Yeah, it was. Yeah, they've done really well.
Yeah, so this is really interesting stuff, ladies and gentlemen. We'll definitely keep an eye on it because, it was such a big launch and then such a brutal sell-off, and now all of this insider buying, it's something we should definitely be keeping an eye on, correct?
That's right. Yeah, we'll keep an eye on this one. The fundamentals of the company are a little bit concerning, in my opinion, because, there has been such aggressive selling from early shareholders. But have things changed? we'll wait and see.
Okay, interesting. Let's put a pin in that one for now. Moving on now to our next story, Blake. This one's really interesting because it touches on something we haven't seen much of this cycle, which is an ICO that didn't really land well. Earlier this month, DeFi platform Infinex launched its INX token, kicking off on January 3rd. Its goal was to raise $5 million by selling 5% of the token supply, valuing the project at just under $100 million, fully diluted. So on paper, that sounds pretty reasonable, but in practice, the sale ran into trouble pretty much immediately. So, Blake, you want to talk us through some of the things that went wrong here?
Yeah, so just for a little bit more context, Kane Warwick, who's previously been on the podcast, founder of Synthetics, which was one of the pioneers of decentralized finance, building exchanges and derivatives platforms for crypto. And now his new project really aims to solve the issues around user experience in the crypto world, Infinex. And they've been doing an incredible job. I don't know if we can say this or not, but one of our previous co-hosts used to work over at Infinex and has nothing but great things to say. They did a really interesting token sale earlier last year where they sold NFTs. What were they called again, Trace? Patrons. Yeah, they raised 60 to 70 million US dollars to fund the project. And the idea was that those that held these NFTs would get early access to new features and functionality, potentially a token sale or an ICO sale, and get better terms within the Infinex ecosystem. Now, this one, I think it's gone from bad to worse, right, Tress?
Unfortunately, yeah. So, taking the NFTs aside, I think as far as the token launch went, the demand was weak straight away. The first couple of days of the sale only was able to raise between 400 and 600,000. So very,
and they were aiming for $5 million, right?
They were aiming for 5 million. That's correct. And the second bit of red flag was around the sale mechanics or the contracts here that were really not up to par, many were saying, and unfortunately they were really ribbed on X.
So what happened there is that investors were only allowed to invest up to $2,500. And the idea of doing a token sale like this is so you get lots of small participants and whales, those people that are rich and, have lots of crypto, can't just buy in and buy all the tokens. But and those initial people that raised the $600,000 were buying on the pretense that, this would be an equitable crowd sale of the token. But then they realized they weren't going to meet that $5 million target. So they changed the rules halfway through the raise and allowed these whales to come in and buy out the rest of the round. And they didn't even do that. They didn't even reach their target. But those first initial buyers were pretty pissed that the rules changed. The rules of engagement changed halfway through the game. And, that's not a fair game.
Absolutely, yeah. And there were a few other things like the fact it was locked for 1 year and that there was just a few things that people weren't really happy around. So when you're having, a lot of people who are unhappy on Twitter, then there comes a lot of bad publicity. So it wasn't happy times for the team over at Infinite.
That's right. And I think this was really compounded by the fact that initially the sale was going to be at a $300 million valuation. And then that was reduced to a $100 million valuation. So those that invested in the Patron in those earlier NFTs, weren't really getting much upside in the project because the reduced valuation because of market conditions. And then there were further issues around insider trading. Trace, do you want to talk about this one?
Yeah, I think, look, there's no real proof of this here, but the optics were bad. And that's because of the rule change that you said earlier. And people being able to put those larger amounts through. So people were asking a lot of really uncomfortable questions around the fairness, about the information as well. So
what about Polymarket?
There were some predictions that were heading onto Polymarket as well.
There were some markets open on Polymarket where people were betting on whether or not they were going to raise the full amount of money, right?
Is that what it actually was?
So whether or not they were going to raise the $5 million. And of course, it didn't look like they were going to raise their $5 million when they had the $2,500 cap on per participant. But then just before they changed the cap to remove it, there was a bunch of people betting that, yes, they would reach their target. So, it's suspected that team members, people on the inside knew that this was going to happen, and they profited from this insider trading, which, has, I think, poured a little bit of fuel on the fire and left a further bad taste in people's mouths.
Yeah, well, look, that doesn't look good. But at the same time, we need to be really clear while we're doing a little bit of chat around Infinex. Like you said, we've had Kane Warwick on the show before, and we know that he in particular is someone who really genuinely cares around building in this space. And there's no suggestion of bad intent here in regards to the entire ICO in general. I think it was just, good intentions and a market that felt very differently what the reality of this market is right now. Like, obviously, the token sale and design is very different to what it was last cycle.
Yeah, and I might just re-emphasize that, the intention of having a cap of $2,500 per participant is a morally good one. But, it feels they also had a raising target. So, this is a bit of a tricky one. And I think can get some unnecessary criticism. But, I'll let you guys make your own judgment based on, all of that information. And hopefully, these guys raise the full amount and get through and continue to build their incredible project over at Infinex.
I think perfectly said. We'll leave it right there. Moving on to our third story. This one goes right to the heart of question that a lot of people ask, and we get asked this question a number of times also. Are stablecoins, especially Tether, the largest, actually safe? This week, one of the biggest stablecoins in the world, USDT from Tether, has made headlines not because of price action, but because of a massive single-day freeze. On January 11th, Tether used its administrative keys to freeze around $182 million worth of USDT across 5 wallets on the Tron network. The amounts ranged from around 12 million to 50 million per wallet. And according to the public blockchain tracking this was one of the largest single-day freezes actions that we've ever seen. Blake, we've talked about stablecoin freezes before, but what actually happened here and why should we worry about this?
Yeah, there's really 2 types of stablecoins, ladies and gents. So centralized ones and decentralized stablecoins. Tether, USDC, and all those other ones that we're familiar with are mostly centralized. And that means they have to comply with rules and regulations around money laundering, sanctions, international transfers, and all sorts of things. So when the various actions happen, using their stablecoin, they have to step in and then stop those things from happening. Now, this is quite different from decentralized stablecoins where they're permissionless and they're controlled by a decentralized network of actors, and it's much harder for them to be for these things to happen. And it looks like that's what they've done. They've identified some nefarious uses of the stablecoin USDT on the Tron blockchain and put a pause to them, which they need to do in order to stay compliant.
Okay, then. So how does this affect places like Iran and Venezuela, for example, who use these stable coins in their day-to-day life, and this may affect them?
Yeah, there's 2 really interesting examples that have come up just in the past couple of weeks. So in Iran, citizens are using USDT because of the volatility of their local currency, and they're especially using it on Tron because there seems to be more flexibility on the Tron blockchain than other blockchains, which is certainly one way it's being used. And as a result of this, some of the tokens on the Tron network have been caught up in, flagged by sanctions and have had to be frozen. And then secondly, in Venezuela, there's a state oil company called Petróleos de Venezuela, PDVSA, and they've been using USDT for all oil payments and revenue settlements because they've been finding it easy to manage. And it's even estimated that over 80% of the oil transactions that are happening in Venezuela are occurring in USDT, which is crazy because they've been doing this to bypass sanctions, but I think that's coming to an end now, and Tether is starting to step in. Particularly, I'm sure they're working closely with the US government on this one as well.
So there might be some people out there thinking, Blake, whether freezes like this are even lawful, and whether this kind of takes, trust away from these stable coins.
Yeah, much of the same rules that apply to, our traditional banking system apply to centralized stable coins. So don't think of them as being too much different, even though the user experience might be a little bit different. Fundamentally, from a regulatory point of view, they're not very, very different at all.
Okay, then. So when people ask if stablecoins are safe, the answer isn't basically a simple yes or no, because the stablecoins like USDT offer stability.
Well, it depends what you're using them for, Trace.
Well, exactly.
Safe for some, maybe not safe for others.
Exactly. We just outlined that point perfectly. But I guess, the ability to freeze instantly is scary, I guess, but it's a reminder that, they're still very, very centrally controlled, I guess, and very different to Bitcoin and the other models out there. But ultimately, safety comes down to whether you trust the entity behind the stable coin and other trade-offs that come along with that. So there you go, folks. Let's leave that there. And when we come back from our break that's about to happen, we're going to have lots of short, sharp news bites. Stay with us. Recently, Bamboo published a report that we think you'll find really interesting. Crypto in Australia, a long-term view. It looks at how Aussies invested in crypto in 2025 and why dollar cost averaging is a number one investing method. Plus all the good things like the role of crypto in 2026 and beyond. Download the report now from the show notes below. Welcome back. You're listening to the Crypto Curious podcast. Time now for our short, sharp news bites brought to you by the Bamboo app. What's up first, Blake?
First up, the current price of Bitcoin is $91,200, an incredible price here. And Bitcoin continues to be trading in a relatively tight range. So that means volatility is less. It's not moving around too much. It's a little bit boring, actually. People are just looking, is it going to go up? Is it going to go down? But I think overall, it's a really good sign that it's not going either way too quickly and it's sticking at the relative
very low, which means everyone's just sitting there and holding their Bitcoin.
Watching, seeing what happens. All right, next up.
Next up, meme coin rally returns. The meme coins have been going gangbusters. There is a notable resurgence last week with very high levels, not seen in quite some time. So maybe everyone's taking a bit of a sidestep from Bitcoin and having a little bit of fun in the meme coin rallies, but it's actually clicking up between $5 and $6 billion a day. And sometimes meme coins can be a bit of a temperature check for the market. So while things are a little bit quiet in Bitcoin, there's a little bit happening over there. But, while we're on meme coins, there was a notable bit of information that came out of Pump Fund this week, and they are the Solana meme coin launch pad. They have revamped their creator fees model, and they'll be changing that up a little bit, saying that the one that they put into place in September, which meant that there was like 3,000 token launches a day, they're changing that because they said there were too many dodgy launches happening, and that may well clean up the space a little bit also. So there you go. That's what's happening.
And we're seeing what I've just read here, Trace, there's 30,000 meme coin token launches a day at the moment.
Yeah, it's back to that at the moment.
Wow.
I think people are trying to make hay while the sun shines because they're taking away that creator fee model that happens. So basically, if you launch a token at the moment, you get fees just for launching. And Pump Fund have realised that, look, that's just made too many people launch silly coins. So once that's gone, I think it'll really clean up the space somewhat. So that's good for them.
All right, next up, BitGo targets a $2 billion valuation and a US IPO. So BitGo is a software company that manages the security and storage of Bitcoins on behalf of clients like exchanges, banks, and even individuals. And they have a whole host of products, and they've been a really great provider in the ecosystem for many, many years. And they're looking to raise $200 million at almost $2 billion US dollar valuation to launch on the New York Stock Exchange.
Wow.
They're managing over, or they're storing over $100 billion in assets. So they clearly have product market fit. So I think this is a really interesting one. And I see a long future with these guys. These guys have been really stable over the years, no controversies, and have done incredibly well.
All right, good luck to them. Okay. More regulation news, but this one is quite important. There's a major crypto bill that will be talked about on January the 15th. This one's shaping up to be a very key date all around the Digital Asset Clarity Act. The long-awaited bill will really define how crypto markets are regulated. This one will be talked about in the Senate and hopefully pass through the House. Yeah, this is very important for exactly how the exchanges will work. So more information about that on next week's show.
Next up, the UK MPs have pushed to ban crypto for political donations. So I don't know what has happened in the UK for them to do this, but clearly some pollies have been getting some contributions from the crypto ecosystem denominated in crypto. This is an interesting one. So we're going to have to, maybe do a little bit more digging here to figure out what happened to, knock this domino over, Triss.
Let's stay tuned next week. We'll find out who got that backdoor payment for that to happen. Okay, well, that looks like it was the last story for this week. We'll see what we can bring you on next week's show. But thanks for being with us again for our second show of the year, folks. We'll be back with you again next week for some more crypto news. If you want to stay in the loop, join our Facebook group and we'll give you extra stories that you didn't see today, or our Instagram page. And hit the subscribe button wherever you're listening to us now. If you'd like to dollar cost average into the crypto market, take a look at the Bamboo app. You can get yourself $10 of free Bitcoin using the code CURIOUS. There's a link in the show notes below. Thanks for joining us. Bye for now.
Bye, guys. See you next week.